Hello guys, it's Randall with Bitraged. So I'm going to take a look at the market and what I'm looking at for this week. Some pairs that are lining up very nicely for some entries. We're also seeing some movement on dollar pairs, obviously because the US dollar index, the DXY, which is what we're looking at right here. Obviously we have this bigger ascending channel, and we know based on the Bitraged trading method, the descending channels will sell. We do have the 1, 2, and we'd be expecting a third touch, which is still possible, but instead of a third touch, what we get is this triple top area. Triple tops or double tops can often replace having a third touch, so you have to keep that in mind. You don't have to get that third touch. Now we could bounce here and move back up, or we could bounce here and move back up, and we could still get that third touch. We will eventually, in my opinion, break that $1 mark again. It just, psychologically, it's bound to happen, but it doesn't have to happen this time. What we have to keep in mind is what we're looking at right here is a break. We're seeing this breakdown. It formed a correction, and it broke lower. So impulse, correction, impulse. This fulfills the pattern. What we need to see now is what's going to happen at this area. If we break it down here on the 1 hour, we have some interesting behavior. Now, this will throw a lot of people off because you have this ascending channel here. And with this ascending channel, a good entry right here for a sell, and also here, even though it's a little bit of a descending corrective nature. People would see this, and obviously this looks pretty decent. What happens afterwards, though, is interesting. So you have impulse, correction, impulse, correction, impulse, correction, impulse, and then this area here would throw people off. What is happening? What's going on? This doesn't seem to fit anything. But you have to separate it out a little bit. First of all, ignore these wicks. They're meaningless. These wicks are meaningless. So we're going to ignore those wicks. We're going to draw right straight through here because we're going to ignore these two wicks. And then if you draw through here, you'll notice that overwhelmingly, the majority of this is a ascending corrective nature. So this is just one giant flag. That's all this is. What happens is people get thrown off by the nature. It just looks a little weird, and they get thrown off. So that's what that is. It's an ascending nature, just a bigger flag to sell, and that's exactly what happens. We get that retrace, which this appears to be a retrace out of nowhere, but it does align somewhat with this area, and also on the euro dollar you can see that as well. We break down back down through this, form a correction, impulse out of that correction, and we form another correction, and we're on that impulse. Now, the fact that we did close the week out with this impulsive candle gives the possibility when market opens that this could retrace, or it could just simply bounce back up to here. If it does that and we see something like this, it's still going to sell. Any sort of corrective movement up to this area is the probable is a sell. It's very unlikely to break through back up if it's moving correctively. The also possibility is just to form a couple hours, and then this could sell as well. We have to see what happens, because when the market opens, we could see it form a different pattern as well. But that's basically what we're looking at on the DXY. Right now, we're only looking at sells, and the reason why we're only looking at sells is because we do have the daily, which is an impulse, correction, impulse. The movement is to the downside. The momentum is to the downside, and that's what we've been expecting. The only way that's going to change is if this literally breaks to the upside and we start to see some clear flags to the upside. But otherwise, we will be looking at this as only a sell. The possibility is still there to, like I said, get that move back up and break this area, just to throw the market off, just to throw people off. That is still a possibility, but not the most probable at this point. Alright, so obviously the euro dollar is the inverse of the DXY, but what is interesting is that there are a little bit of differences. For instance, on the euro dollar, we do have a double bottom here. On the DXY, we do not actually make a complete double top. It comes up, but it doesn't completely make that double top. On the euro dollar, we do get that double bottom. So if you're only looking at the DXY and you're waiting for the DXY to make the full move, the euro dollar might have made the move for it. So it doesn't matter which one makes the move, it is still valid. We do have those 1, 2, 3 touches plus a double bottom. It just makes this ridiculously probable that this is moving to the upside, at least till here. Then we can see what happens. This, like I said, it's possible this still can break down lower, but it just isn't likely with that nice impulse from that Morningstar type formation, correction, and another impulse. So we're still looking for upside on euro dollar. If we break this down to the hourly, so again, this type of stuff kind of throws some people off, but you have a, descending channel. Okay, this is going to move to the upside. In fact, that was a really good entry simply because you have that arcing double bottom, which euro dollar works really well off from. Now, sometimes you will get that arcing nature and it will still drop lower and then go. It's just the way that the market throws people off. But to take a 1% loss on this entry for the risk, or for the benefit, the potential benefit of it moving high to the upside, I think is worth it. Now, it does come back down and double bottom here, but then it's taken off again. So you have a double bottom arcing nature plus another double bottom, which the majority of this move is corrective. We are expecting this to move to the upside. There is no reason to see this break down lower, and if it does, we will look for confirmation that it is going to continue. This is a little bit more sloppy, but it does look like it is forming a potentially bigger flag. But again, with market open, sometimes you'll get that volatility and it will just move by itself. So look for that. I would tell you to pay attention and really watch for good entries. Look for a double touch here, or even a break and then a retrace. A break below and a retrace from here is probably going to be a good entry. I mean, obviously you need to pay attention to what kind of movement you're getting to that point, but that would most likely be a good entry in that area if you're looking for an idea. Now, we do want to break above this level, because a break above this level and then a correction really is going to signal that the market is in full on bullish move up on this pair, because we'd be breaking this previous lower high. So descending nature here. So descending nature, we break up that area. It's just a good signal that the market is in full swing to the upside. It doesn't mean we're not going to get bigger corrective movements down, because we will, especially with those bigger movements. But this is most probably moving to the upside. And then the next step is just to look for the entries. And what I would encourage you is look for good quality corrections. 2 touches on top, 2 touches on the bottom. And you can use a 15-minute to filter those, but obviously find them on the 1 hour. If you want an inflection point, one thing you can do is you can put in this trend line. It will give you an inflection point. And then what we can do is we can see how this interacts here. So we're almost there. If we see this move back up and then move down, that area, especially if it breaks this line, I would look into that area for an entry. If it moves up and moves like this, I would not buy an entry on the break. The reason being, if it's just fulfilling the pattern to this and then it moves back down, you're going to get tagged in and tagged out. So the best entry would be here on a second touch. Technically you could say a third touch, but a second touch here, because move up, move down. That's what we're looking for. So that type of an entry is something I would be looking for. Or if we do something like this, and then we kind of tag the trend line with a correction, or even better, if we break that trend line and then we correct on top, those type of entries have very high probability. If possible, enter on the break, put your stop loss here, and you can enter either at the break or at the bottom if you get a retrace. You definitely want to get that retrace. Okay, so then the next pair that we are looking at is the British pound dollar. Obviously, when the DXY makes big moves, we often see those reflected on the British pound dollar as well as euro dollar. I've found that sometimes with the bigger moves, British pound dollar goes first and faster, and sometimes you'll see British pound move up quite good, and then finally euro dollar follows. But as euro dollar follows, you'll find that British pound is sometimes correcting during that time. So sometimes you can jump in on British pound dollar, catch a nice move, and then as that move is kind of correcting, euro dollar will catch up. Not always, sometimes they move more closely together. Right now, we have similar formation here on the bottom. We have that double bottom. It just breaks that previous low area, and then it's moving up. We have impulse, correction, impulse. So same idea. This is looking for more upside. We do have that 1, 2, third touch. We don't have the top of the channel because of just the nature of the way it works out. It's more of a broadening wedge right now. That really doesn't matter. We will be looking for a touch here or that as an inflection point, as well as these areas. So keep an eye on those areas as we move up. This is a trade. This is a trade that I'm actually in right now. So we have this, some people would see this as an ascending channel, and I admit it does have that somewhat of a flare to it, but we're moving up. Correction, impulse, correction, impulse, correction, impulse, correction, impulse, correction, impulse, correction. So this is just a running channel to break to the upside. It's still impulsing and correcting and moving up. So that's why I took this entry. I know a lot of people would see this as a 1, 2, third touch, and they'd be looking for a sell, and that can happen. You do have those high test wicks, but in my experience, this is just a correction to move the upside. Now, that said, depending on the volatility and how the DXY moves when market opens, this could simply correct down and take me out for 1% loss. I am currently in still at 1% loss. I'm waiting for a correction. Right now, we're sitting at like 1.6% in profit, and I'm not moving it to break even yet. And the reason why I'm not is because there is no reason why on market open this couldn't just correct down here, take me out for my break even, and still move up. And even if I take 1% loss, I'd rather take that risk for the potential benefit, which is really amazing. If we look at the upside here, it really is amazing. I got in with a 30 pip stop loss. The only thing that's a little bit, there's a potential that could take me out and still go, is the fact that my stop loss does not cover this wick completely. It is possible we come back down to either double bottom that or take it out and then move up, and then I'd get taken out. If that happens, it doesn't bother me. I'd be just looking for another entry. It's not a big deal. For those of you who are in the Slack group that are part of the course, you know that I traded basically this move up, and we were able to take 10% off on that move. Now, I say that I did get out, and if I was still in that trade, I would be at 20% for that one trade instead of the 10% I took. I say that simply because there's so much potential in the market that you can catch really good trades. You can benefit really well on those trades. Take 10% out of one trade that takes literally a couple days, and still leave 10% on the table there. So there's so much potential. Never get caught up in FOMO. It's not something you need to worry about. There's just tons and tons and tons of potential, and every day we grow and we learn better and more. So that's a trade that I'm looking at. If you're not in this trade, wait for this to break completely and to form a correction. Any correction like that is going to be high probability. So that's something that we want to look at. Just wait a couple hours after market open to make sure you get those spreads down, make sure you get the volatility out, and make sure that we aren't getting into trades we shouldn't. All right, so EURCAD is another pair that I know a few of you are looking at, and just some things to keep in mind as you are looking at this pair. We do have this descending nature. We have 2 touches on the top. We have technically 1, 2, 3, and you could call this a 4th touch. There's a reason why I left this in here like this instead of moving it, because you can move it like this, and that makes more sense. That seems to fit. The reason I did that is because some people will be seeing that as a break. You have to be careful about trendline breaks. What happens after it breaks? That's what matters. A trendline break doesn't mean anything. You'll often get a break, and then people will be buying the break, or selling the break in this case. And to sell a break like that just makes no sense. There's no confirmation, there's no confluence, there's no reason to sell that break. And they'll sell it, then the market will shift, and they'll get taken out with a stop loss, and those stop losses will push the buys, and then you get this heavy momentum, and that's what this is from. It's those stop losses being taken out and pushing the price higher. Now on this pair, we do have a couple of factors that are good. We have a descending channel and then a descending channel within a descending channel. Then we have the morning star formation here at the bottom with 2 impulses. One thing that could happen, we could come back down and double bottom. That's a potential. If that happens, I would be buying that double bottom. That'd be a good place to buy. Doesn't have to happen. We have to look and see what happens again on market open. Do we get a correction here? Does it continue higher, or do we start to see a rejection back down? If we get a 1 red candle, that's not going to put me off, because it could be simply forming a correction, and then it would still mean upside. This pattern here, I know people were looking at. You could have taken that buy, taken some profit, and gone out. That was not the big move. But then it comes back down, and we get this nice rejection. So the probable on this pair is to see the upside. If we break it down to the 1 hour, so you take and put a trend line in here, yeah, something like that, and you would have 1, 2, 3rd touch. You could even say that was a 2nd touch right there, which would be a better 2nd touch than this because it actually moves off. I prefer that. But how would you actually take this entry? Obviously, move this to here like that. So obviously, if you look at this, you could say that that has a very nice rejection feel because you have a bearish candle, wants to be a doji candle, and then a very bullish engulfing candle. The problem is, how do you take an entry? Because you could take an entry here and it could come back down and stop you out. That could happen. We do have arcing nature plus that 1 rejection candle. So obviously, if you're going to take this type of entry, I would prefer taking it here. Because 35 or a little bit more than 35 pips would get you covering that wick, and the upside you'd be sitting at 5%. And if you did get tagged out and moves down, so be it. But the chances of you getting tagged out from here are lower than here, simply because this is so impulsive that forming a correction here is possible, and they could just tag you out there. So I prefer not to enter on these type of candles. It just is sketchy, and I do not find that it works out very well. So I would say be careful with that. But a descending channel like this, we are looking for the break. We didn't really get that correction, but because we got this hesitation, we could see this move back down just to retest that area, or to here at least. That's an area that I would look for. If we get that, again, a double bottom or a break, you could buy that area. Again, if you get the retrace candle, rejection and retrace. Interesting pair, really. The way euro pound moves is very unique and very interesting, because the euro and the pound are actually fairly close. They can move very correctively, but at the same time you still can get those bigger moves, and you have to be able to capitalize on them. So I know that people took this entry here and then they got stopped out. I know people took this as a top but I was waiting for better entries on this, because you can get tagged in and out multiple times trying to find the top, and sometimes it's better to take a step back and wait for the market to actually show you what's going on. This is definitely a move to the downside. It could move back up. Anything can happen, but one of the reasons why we are looking at it as a move to the downside, as confirmed, we do break that area, and we also break this low, previous high or low. So this is a confirmed move, a downtrend. We do have impulse, correction, impulse, and that's very impulsive. I was in a couple trades. I took a couple trades for Euro Pound and made some good money on Euro Pound, but it did get very corrective. So I understand if a few of you, might have not wanted to get involved. So just to give you an idea of how this looks. So obviously this could look very corrective to you, but if you look at it, that's a correction. That's a correction. This is a correction. That's a correction. This was a correction, but it was more of a flat correction. Obviously those triple top areas, this is something that Euro Pound really likes to do. Double tops, triple tops, arcing nature with a double top. It does break that area, but obviously you'd be entering on the retrace. So if you'd entered on that retrace, that would have been a very good entry. This is almost a triple top. Obviously moves up a little higher. It's not the best one, but this is the best example right here of a triple top. It does that type of stuff fairly often. So on this pair, I'm just looking for downside. We have broken this low, and because we've broken this low, I'm looking for a smaller correction. Because we had these larger corrections, a smaller one is likely, and to get in on that smaller correction. So I'd be really taking an eye on Euro Pound this week, watching for those a small correction to get involved in. If you look back and you back test the type of corrections that Euro Pound forms, they can form some tight corrections, and then some of these style corrections. Just do some back testing and see what is possible. But if you'll notice this type of pattern, it likes to move up and then move off. And when it does that, it can be forming a bigger correction. But because we already did that, we are looking for most likely smaller corrections now. So that's Euro Pound. Just something to keep an eye on for this week. The only other option I would actually consider with Euro Pound is the fact that we are forming somewhat of a descending nature. We do have 1, 2, 3. This could be a fourth touch. It's moving aggressively and very impulsively towards us. So if we get that very aggressive bounce, then I would be looking for a possibility that this is actually going to reverse the upside, and we could tag this area. But I'm not accepting that as a probable until we either get a rejection or, a slowdown in the market, maybe a descending corrective. But because of it is so impulsive, I'm accepting that's a possibility, but obviously not the most probable. So I'm not going to let this trend line put me off, even though it does match up nicely, because it is so impulsive. Just watch the market. Just watch the nature. If we do get what appears to be a flag like this, pay attention to high test, low test candles. Pay attention to another thing that I've been noticing. You get an impulse down, you get big candles, maybe 2 or 3 big candles, and then it forms a couple tiny candles, and then you get 1 or 2, 3 big candles. Those type of corrections, I've noticed they can just reverse on you and not fulfill what you're expecting. Do some back testing on that, but I'm just telling you, this type of stuff, this right here is actually a decent example. It's not the best, but you have an impulse down, a couple bigger candles, very tight, a couple of tight candles, low about momentum candles, and then a bigger candle, and it kind of moves off. So you have to really pay attention to what kind of correction you are noticing. This is different from that. Even though they seem similar, it's still a move up, but the middle is different. It just it just adds another dimension. You have the same thing going on here. You have those bigger candles here, very tight, small, and then suddenly it moves off like this. Even though that is kind of a double top type situation, you have to understand this is, and it does have an arcing nature, but I've just noticed recently as I've been backtesting that type of pattern has not worked out as probable as often as your other forms of corrections. Now, when you get that third touch, you get that break above this high and a retrace, that's the entry you'd want to take. Okay. So hopefully that made sense. But there's just something you need to do some back testing for yourself on. These are just ideas, some things I'm noticing. It doesn't mean every single pattern that you see that has those big candles is going to do that. It just means that, you may want to do the back testing yourself. All right, I'm going to show you Aussie dollar as well. I'm not going to show you all the dollar pairs because obviously a lot of the dollar pairs are just going to line up with the DXY and you're going to see the DXY pull them with it. But I did want to show you this one because a couple of things. It does have 3 touches on the top. You do have 1, 2, 3 touches on the bottom. That that low test candle. But you also notice that low test was not a long-term entry. I mean, obviously you get that move up, but it does move down again. So I just encourage you when you're trying to look for the tops and bottoms for the bigger high time frame patterns, often they make double bottoms, often they make double tops, often they'll come back and retrace at least partially. So the greed or the FOMO to try and catch that exact reject, you don't need to worry, because most likely most of the time in most pairs you're going to get that either an arcing motion, either a double bottom, or that corrective movement down. In this case it has all 3. It's just something, you really don't have to stress it and try and catch the exact moment. So descending channel, you get that double bottom, arcing nature, and corrective movement to the bottom. Very, very good indicator. You even look, there's actually 3 test candles. It's just a really good place to enter, or, to understand the market is moving the opposite direction. All right, so if we break this down on the hourly, a couple things that I want to look at. Obviously, I took a long on this. It was a good entry. I took a long on this trade, and I got tagged out in that area. And if you're curious why, you can feel free to message me, and I'll explain why, my philosophy. I'm probably going to do a video at the end of the month explaining it, but you can ask. Then we get this corrective movement up, that double top arcing nature. So now I'm flipping my bias and taking a short. Now, a couple things to keep in mind. If you go to the daily, there's really nothing on the daily here to indicate a reversal. We are very impulsive, okay? And we go to the weekly. You do have this area here. So obviously in the past there's a potential to look at that. So I'm not saying this is the highest probability trade in the world right now. And obviously if you think about it, Aussie dollar short versus I'm in British pound and dollar long, if you think about it, it may not make sense, but it does line up for me. So obviously I have 1, 2, 3 touches, 1, 2, 3 touches, double top arcing. I would not have taken this just on one confluence, but I do have 3, and so I did take it. I also placed my stop, so if we do move back up and break this area, most likely I'll still be in the trade. There is the potential that aggressive movement on the DXY, the British pound dollar, could just drag this up to take out my stop loss. That is a potential, and it's something I was willing to risk. But I do like the nature. I do really think this is a really, really clean pattern, and this is really clean ascending, and you do have that rejection. It's a somewhat of an evening star formation. It's not a perfect one. right on a double top area. So the confluence is there. I was willing to take it, and there's a decent chance that we will break, even though you might see British pound dollar go to the upside. So that's another trade that I'm in. So I'm in 2 trades from last week, British pound dollar and Aussie dollar. A little bit concerned that my 15 pip stop might get taken out by the spreads when market opens. It's going to be about 13.9. With my competitive spreads, it's still going to be close to that just because it's Sunday. So there's a potential that I'm just going to get taken out at market open, but I have to figure out whether there's anything I can do about that. All right, so you probably notice here I have doodled a little bit. Yeah, I'm not going to really explain that other than to say something I'm just back testing and looking into as a pattern. So if you want to take a mental look at that and try and figure it out, that's fine. But I'm not going to explain that. I'm back testing a couple different ideas, a couple different things, a lot of different patterns, just trying to figure out what are the best entries, what are the best, signals from the market. Just to maximize my potential and just to challenge myself. So that's kind of what I'm doing. And obviously I'm focusing right now very heavily on testing, and right now I'm live testing rage entry and beast mode management, which I'm very excited about because it's the reason why I took 10% for British pound dollar this past week instead of taking 6%, which is what I normally would have taken just because I would have gotten out earlier. And honestly, if I was following it the way I should be, I'd probably still be in the original British pound dollar trade. But it is mind-blowing. There is a lot of potential in the market, and rage entries and beast management just really give that next level, I think. So looking forward to releasing that next month. It should be sometime in October. But I do want to finish out this month testing it on all pairs. And hoping to do some demo testing on gold, silver, and oil, because those are 3 pairs I can't actually trade because I'm in the United States. So that's currently what we're looking at. There are a couple other pairs that are setting up, so this isn't a complete list of everything, but it just gives you some ideas, some things to look at, and hopefully maybe some things you hadn't thought about. If you have any questions, just drop them below and let me know. I'll do my best to answer them. Hopefully this was beneficial for you guys, and I look forward to hopefully bringing back weekly market breakdowns and considering doing live streams again. We're going to try and figure out how to do that. So thanks so much for watching. Hope this was a very good benefit for you, and wishing you all the very best of trading this week. Definitely follow your trading plan. Don't get caught up in FOMO, and do not close and exit trades without a valid reason. If you're in profit, let the market tell you it's reversing. Take it easy, guys.